Have you ever wondered how your property taxes are calculated and how they affect your monthly payment? So you're at the right place. We're going to talk all about property taxes today. So I'm going to cover property taxes, how they're calculated, and how they fit into your monthly payment for your mortgage as well. My name is Kevin Brierton, certified mortgage planning specialist here at the Brierton team. And I'm going to talk about something that's super important again, is property taxes and how they affect your monthly mortgage payment and your mortgage overall. So let's start with the basics. Property taxes are taxes homeowners pay based on the value of their property. Now, those taxes are used to fund things like your schools, emergency services, think of fire department, police department, and also schools in the area. So when you pay the property taxes, you're helping your neighborhood become a better place to live overall, which is really what you want, of course, to help your property values stay higher as well. Property taxes are calculated by your local government. Now, they're assessed based on the value of the house and then whatever tax rate they apply. And these rates can vary pretty significantly based on where you live. So for example, a home in one town might have almost twice as high of a property taxes than another area, even sometimes in the same city or same state. Outside of different states, it could vary a lot. So you want to check, your local tax amounts as you plan for your payments. So to figure out how much property taxes you're going to pay local government, what you're going to do is as kind of like a basic amount to work with. So let's say, for instance, your home is assessed at $200,000 based on the government assessment, which can be different than your value of your house. And your property tax rate is 1%. That would mean your property taxes would be $2,000 a year. Now, the percentage is going to vary based on where you're living at. So find out the percentage and then find out how they assess the amount. Sometimes the assessment's on the purchase price. Sometimes it's on a different value based on what the local government assesses. So you want to check on that. Now, you might be wondering, how does a monthly tax payment affect your monthly payment? How does property taxes affect your payment? So when you look at the monthly mortgage payment, your lender often set up what's called an escrow account. This escrow account is really a special savings where all the money can be set aside for property taxes and home insurance. Each month, a portion of your monthly payment goes into the escrow account. When the property taxes are due, your lender uses that money in the escrow account to pay them. So this way you don't have to worry about saving up for a big tax bill once a year. There's a few loans where you don't have to pay this. So you can actually waive the escrow account. You basically have to pay your property taxes and insurance, and you can have problems if you don't, but you don't have to pay it inside your mortgage payment. Generally speaking, if you could put 20% down and you're a conventional or jumbo loan with 20% down. Now, the FHA loans and VA loans and USDA, they're gonna require you to have an escrow account no matter what you put down. So just understand, in most cases, it's best just to roll it into your payment. You usually get a little discount based on cost or rate for it. In some cases, people like to manage it on their own. So let's kind of break down the amounts though. So let's say your monthly payment is $1,500. Part of that is going to go to pay back your home loan. And then another part of that goes to your escrow account, property taxes and insurance. So if your monthly escrow is $200, then $1,300 goes to your loan and $200 goes to your escrow account, property tax and insurance. Now, there's also a breakdown, obviously, of the $200, how much is going to property taxes and insurance. It's important to understand, though, that property taxes and home insurance can change. So your monthly payment, if you're on a 30-year fixed, shouldn't change as far as your loan payment, but your taxes and insurance can change. So they're going to go up based on your home value or local government changes on tax rates, and your lender will adjust your escrow account to make sure there's enough money in there to cover the taxes and insurance down the road. So some homeowners might choose to pay their taxes directly through the escrow account. So if, instead of using the escrow account, they want to pay it directly like we talked about. But, if you do this means you need to save up enough money to pay the property taxes on your own. And a lot of people find it's easier just for the lender just to handle it for budgeting reasons. And if there's a shortfall, they're going to sum up and still pay your taxes. And then they'll break down, let's say, if you're short $1,000, let's say your property taxes jumped up, they're actually going to help you break that down on a monthly amount so you don't have to pay that big chunk of money. So there's some big benefits of having it rolled into your loan. If you're a first-time home buyer, for sure, definitely put in the loan, get used to it. If you have a bunch of rental properties, we've seen it both ways. Some people love to manage it on their own, some people don't. It just depends. It's just so much easier if it's in the mortgage, and that's generally what we see. Paying property taxes might seem like a lot, but remember, it's, it might seem like a lot of money, right? So just think it's helping support your communities, your schools, your road safety, your emergency services, fire, police, and we really want them around to have a great neighborhood and a great community. So it's important to have this fully funded. So in a way, it's your investment in your neighborhood. So to sum it up, property taxes are crucial for home ownership in your neighborhood, and they're used to fund important services like we just talked about. And they're also going to be included in your monthly payment through your escrow account. Understanding how they work is just great to make sure you better manage your finances and feel more confident with your mortgage. And that's the purpose of these videos that I do. I want to make sure you're empowered and confident to make a confident mortgage decision, so you know what you're getting into and know all aspects of it. Again, thanks so much for watching. If you have any questions, please comment below, or you can give us a call at 480-553-8770. Again, Kevin Brierton, Certified Mortgage Planning Specialist here with the Brierton team at Neo Home Loans. And I hope you have an awesome day, and we'll catch you on the next video.